guys, this is Pedram Raufi and you're watching the Markets Review by Gerchik Co. Don't forget to subscribe on the channel and ring the bell so you would know what kind of videos we are going to have in the future as well. As you know, we are going to go through the situation which we have on the news background. We're going to check the news background. We're going to check some of the economic factors and political factors, geopolitical factors. And next, we're going to actually see what is going on with the United States stock market, what's going on with main forex pairs, and we're going to check the price action of the most important and famous cryptocurrency like Bitcoin and Ethereum. So don't forget to watch the video till the end. At the end of the video, we are going to check the prices, the price action of Bitcoin and Ethereum, and we're going to check the news background of these two assets as well. As you know, United States stock market have made some really deep downward movements during previous week. And if you remember from previous week, we told you that prices are not going to stay that strong as it looks like. So I've actually told you that we were under the local minimum. That's S&P 500 index of United States stock market, 4-hour chart, which is a midterm chart. And we were somewhere here under the local minimum, and we told you that mostly we are going to continue to fall. This movement could even maybe stops for some while, but we are going to continue this movement, downward movement, and we are going to retest the local minimums, which we have historical local minimums of previous months, which are around 4,150, 4,100. So now we're actually retesting these levels after some accumulation of energy, and we have retested them really impulsively. There's two different type of predictions now for markets. Most of analysts now they are telling that because of war and because of the conflict between Ukraine and Russia, the stock markets and the inflation mostly is going to go higher, and because of that, the stock market is not going to feel so well. And there's just one reason: because Federal Reserve System of the United States is going to tighten the monetary policy because of inflation predictions getting higher. But there is another side of this problem, that if at the moment, at the start of some the moment when inflation repeatedly is going to get higher, Federal Reserve System is not going to do anything. Federal Reserve System could maybe say that it's going to tighten monetary policy, it's going to, for example, hike interest rate to just make dollar prices stay strong, but it's not going to do it. And previously, there was another analyst that told us that there is some prediction about inflation in the United States, which is now peaking. Actually, peaking is around local maximums, and that's one of the most important signals that United States 10 years yields and of course the inflation as well is going to maybe make some correctional downward movement. It would mean that inflation have been peaked already, and because of the war in Ukraine and because of some sanctions and some post-economic impacts because of the sanctions on the United States market, we cannot say that because of all of this we are going to get into some stagflation or really high risky inflation. This is a problem with which markets are going to, for example, to get involved with maybe within some months, not now. And that's a prognosis which always we had, for example, from previous months. We have different type of prognosis and predictions that stock market is going to fall so much, is going to fall sharply, but what we have seen from previous 3 months wasn't the really sharp falling. It was just a continuation of a consolidation. It was just a continuation of the movement of price action inside some local corridor. So, and now we are actually retesting the local minimums of this corridor. We are actually retesting the local minimums of this corridor really impulsively with the formation of a convergence. I'm going to show one of the very interesting articles from Jim Cramer about the markets and about yesterday price action and today price action. Actually, he's telling us that buying the deep just on the days like Monday, like this, like previous day, maybe today, maybe during this week, you could buy the deep, but it could be really late in the near future, because prices mostly, when they speculatively retest these local minimums, they're going to start to hike, they're going to start to rise further, and you won't, if you don't get into market in when it's actually cheap, you won't find these moments maybe near to 4,400, 4,500. So here we have some predictions which are more technical, which are less negative and pessimistical, because we have already had all of this pessimistic analytics already from last half of a year, which was telling us that the United States stock market is going to fall so much, it's going to fall really heavily, really strongly, but that didn't happen actually. I'm going to show you the S&P 500 1-hour chart and just pay attention what is going on with this stock price action, with this stock's price action during 2022, 2021, and that's what we have. It means it's some curve actually, but continuation of consolidation movement is the main scenario around which we are moving. So now, impulsive retest of local historical minimum of the year, and under this local minimum we hadn't yet closed. So daily candles, weekly candles, we need them to get closed under, for example, 4,000 or maybe 4,100. And after that we can say that, oh, maybe stock market is going to get in some downward phase. But for now it's really early to tell something like this, to tell that stock market are going to fall today, tomorrow, within some month or two. I don't think that it's going to fall within some month or two even. It's going to reverse, it's going to continue this consolidational movement further. Let's see what's going on with the Dow Jones prices, the industrial stock market index of the United States, as well impulsively retested the local minimum. This local minimum is actually it's a real target level, after the retest of which we have to pay attention if daily or weekly candles are going to close under the local minimum, under 33,000, maybe 3250. And 33,000, 3250 is a range under which we can tell that prices are going to fall further. But before we get under them, before daily or weekly candles get stuck under this range of 33,000, 3250, I'm sorry, 32,500, that's really early to tell that prices are going to fall sharply or going to continue this downward movement. Previously, we had a really impulsive retest of the local minimum after accumulation of energy, and that's why I cannot say that prices in the near future are going to continue a really sharp downward movement. Maybe they're going to make some low amplitude downwards wedge formation or channel formation, but that would be as well a signal of reversal. So don't forget to pay attention on the most important and basic technical patterns of technical analysis. Next comes the Nasdaq prices. They're going to check the main high-tech index of United States stock market, which is as well retesting the local minimums. From previous time, we told you that prices are going to retest this local minimums, and that's what happened. We told you that this stop here doesn't mean that prices are going to reverse. It means that prices, mostly we have to pay attention, we have to just know that prices are going to speculatively, impulsively, anyway, they are going to retest the local minimums. There is too many reasons for that, just for the speculation to come true because of war and because of geopolitical factor and impact of sanctions on United States market. But don't forget, the only thing that could make United States market suffer is relation with China, not with Russia. The main thing that maybe could make United States market to a little bit suffer is some, for example, problems in trading with China, which is not going to get escalated during the Biden administration, because they're going to actually, when they came to this administration, Democrats, Biden administration, they told that they are not going to escalate the situation. Yeah, they would close some of, they put some of the Chinese companies to blacklist. They did it really fast. Those companies were related to some security organization, some military organization of China, but now they're partly isolated, but they are continuing. They actually continue to trade with each other, and they need this. China need as well this moment. And about Nasdaq as well, we're just waiting for reversal, but don't forget that for Nasdaq, for Dow Jones Industrial Index, and for S&P 500, we could have some nearest sharp bearish speculation. So just take 20% or maybe 30% of these last impulse of the price and maybe add it from the under. It would be till 1 to 12,000, maybe 12,000 for Nasdaq. That's a level that could get retested. Don't forget. I'm gonna actually show it to you at Dow Jones as well, because there would be some risks to when you're getting into a dip, when you're taking a dip, when you're catching a dip of the market, when you're getting to the market to buy when the market it's around to bottom and it's actually retesting the local minimums. There would be some speculative movements. There would be some risk. For example, for Dow Jones, it could be level 32,000. It could really break through. It could really 31,000, 32,000. These levels could really get breakthrough. But I mean that to wait for a harsh, strong downward movement, it's really irreasonable. It's really it's not really logical. It won't be realized in the near future. This kind of sharp downward movement. You just need to know if you're getting to the dip for now, and if you're getting to this market to buy, for example, Dow Jones or S&P 500 or Nasdaq. You have to just pay attention that about 20% of this impulse, previous impulse, could be realized as continuing of bearish movement, speculative bearish movement, to just finish the bearish attack on the markets which we have now. And this could happen, and then prices could actually get into some consolidation or consolidational movement. So don't forget for Dow Jones is 31, 32. They really could get retested. So we have some risk anyway. And S&P 500, we're going to check them as well. 4,000, I told you already, 4,000, maybe 3,900. I don't think that 3,900 would get retested, but $4,000 could get retested. That's a level which speculatively is a psychological level. Speculatively, impulsively could get really retested, but after that, prices mostly are going to reverse for maybe some midterm. Don't forget that Russian invasion in Ukraine, that was a really great fiasco for the country, and they're trying to continue this invasion, but the land is for Ukraine is kind of made Ukraine more stronger and would make it a little bit stronger in the future. So there is different type of prognosis that this active phase of the combat could really end within some month, and maybe within some weeks we could have some phone calls from Macron to Putin, from I don't know, from Scholz to Putin, which could maybe change the situation for a while. So technically we have some reason for United States stock market to reverse. And of course, if you realize that a real long time have been already passed from, for example, the start of the new second active phase, it's around 1 week or half or 2 weeks. It could be some de-escalation in the near future, during which oil prices are going to fall, gold prices are going to fall, and dollar prices as well won't rise, but stock markets return to the main upward phase. This would be a really realistic scenario about which you can say actually, or we can tell. And I just leave this page, so I'm going to return to it. Maybe before we get through the main forex pairs, we have to check the economic calendar, so we would know what kind of releases during this week we are going to have. And due to these releases, maybe some of the main pairs or currencies like euro, pound, Japanese yen, dollar, and Swiss franc are going to make some movement. Just let's go and check if we are going to have any kind of important releases. That's actually start of new month. It would be really great if we pay attention on the fact that the stock markets have been already bottomed from previous month, and the closure of this week above the local minimums on of the stock markets could be a really great signal of the scenario which could continue during this month, which could be really bullish. About this actually tell Jim Cramer in his program. So I'm gonna add some oscillator here and return to the economic calendar to check the information and about releases which you are going to have. So today's Tuesday, we have holiday in China and in Japan. Today from Europe, European Central Bank President Christian Lagarde is going to speak. Don't forget that European inflation have already peaked. That was the last news from European Central Bank, that inflation in Europe is kind of peaking, and previously they've told us too many things about tightening, about the monetary policy tightening, about interest rate hiking, which they are mostly are not going to realize it. They're not going to actually make it come true. But the information about the inflation hike have been peaked, or it's have already reversed from the local maximums. There was a chart which I've seen about the European inflation. That's really good news, because of which European stock market could start to rise again. So during this week, during next week, there's a really great opportunity if the geopolitical situation get a little bit de-escalated as well. This would be a really good opportunity to get into maybe even European stock. But you have to pay attention that euro is not going to be strong, because they are not going to even talk maybe about the interest rate hiking or monetary policy tightening in the near future. So just take it in mind. 2 o'clock by GMT, JOLTS job opening at United States, which is unfortunately falling. As I told you from a month ago, job market in the United States situation on job market in the United States have to get worse in the future, in next month. And this trend have been already started. Maybe some of releases which are short term, for example, weekly releases about jobless claims and about job market generally, they are maybe positive, but the midterm and long-term releases could be not that good. Employment change at New Zealand today. It's not going to change, which is actually a good signal, because most countries have a really big problems with job market now, and New Zealand index is not going to change. So tomorrow, holiday continue for China and Japan. As well, because of those holidays, maybe for today, maybe for tomorrow, Japanese yen and Chinese yuan volatility could be not that high, and you maybe won't be able to trade because of low volatility during holidays, because banks are not working actually, and maybe yuan to dollar, maybe dollar yuan or dollar JPY could get into some consolidational phase. What's come next? Which would be, I'm sorry that I don't, I miss some of the releases from, for example, from Australia or maybe from Canada, because Australian dollar and Canadian dollar mostly get a higher impact from oil prices, price action, than economic releases. So I actually, always when I do some analysis, I check first the situation on the oil market, then get into Australian dollar or Canadian dollar to just be sure that prices are, because they have a straight correlation with each other. From United States at Wednesday, ADP non-farm employment charge, which is an important release, and unfortunately is going to fall as well. Well, that's actually April release. That's actually what we told you about, that the problem with job market in the United States will still be on the market. This factor won't help dollar prices to rise. This factor would maybe help stock market to a little bit rise, because when job market is weak or getting weak, Federal Reserve System or central banks are not going to hike the interest rate or tighten the monetary policy. That's the only thing that we can actually take into mind. ISM non-manufacturing PMI from United States, which is rising a little bit. Crude oil inventories, which is important, at 2:30 tomorrow, would be a deficit. Really great for oil market, really bad for world economy, because the energy crisis continues. The energy crisis have been escalated because of the Ukraine-Russian war, and the energy crisis is going to continue because of sanctions against Russia. Many European countries nowadays already said a really harsh statements about Russian gas and oil, that they are going to ban it, they are going to shift into, for example, African countries or maybe Arabic countries to supply them oil or gas. But that's a process which could get started within some months, maybe within some years. But you have to know that any statement about sanctions from Austria, from Germany, from France, for example, these countries which were a little bit loyal to Russia during previous decades, for now they're just yesterday, from previous week actually, I think that I heard that Austria and Germany strongly against to supply Russian gas into country, and they're going to do everything that possible to ban it, to just reject it and don't buy it from Russia, because they are not going to buy Russian gas by rubles, by Russian currency, as we know. So there's a good news for oil prices during. It could be good news for oil prices because of the deficit of the value of oil supply in the world, in the United States, due to the releases for Wednesday. And what's come next is Thursday. From Britain, composite PMI, which is not changing. Inflation, Britain inflation, and the interest rates in Britain. They've already told that they're going to hike it. They're going to tighten monetary policy, but you have to pay attention. Are the rates are going to rise? So if they're not going to, this would be not a really good signal for GBP. There is no reasons for Britain to not to hike the interest rate, to not to tighten monetary policy. It's in a really better situation, economic situation nowadays than the United States or even Europe. Initial jobless claims of United States at Thursday. It's going to rise. Unfortunately, that's not a really good week for dollar, I think, and this could be another signal for stock market to rise maybe during this week. And the last day of the week, Friday, construction PMI from Britain, not so good. Non-farm payrolls of United States, which are getting lower. Unfortunately, that's not a really optimistical releases. So about dollar prices, maybe during this week we could be really sure to fall further and the stock market to maybe rise correctively at least, or to continue some to get into some consolidational movement at least. Unemployment rates from United States, which is getting lower for April. Not that much, but a little bit. So, Canadian economy showing us that maybe it's going to show some negative releases for this week, but we are going to stick to oil prices. If oil prices are rising, Canadian dollar and Australian dollar would rise as well. So we're going to go through the main Forex pairs: Euro, Pound, the Australian dollar, and New Zealand dollar. Let's just see what is going on with the most important and famous Forex pairs. So the prediction is for this week that we could get some speculative downward bearish impulses on the indexes, on the index charts of United States stock market, and this would mean that maybe dollar is going to make the last impulse upward and then it's going to reverse. Let's just open dollar prices indexes as well, so you would maybe compare the opposite correlation between dollar and euro and pound and Australian dollar and etc., so it would be more visible. The XY, United States dollar index. From previous time, if you remember, we told you that prices of dollar, despite the breakthrough of $100, which is a psychological level after the retest of which, or breakthrough of which, prices are mainly have to reverse. We're told that prices are not going to reverse. Dollar prices are going to rise further, and that's what we had from previous time. Really speculative movement. Too much gaps. There's too much gaps. This movement is really artificial. We can actually call it like that, because Federal Reserve System is not going to make any harsh changes in the policy, because the situation with the stock market is actually the most important thing for now. And as we know, the policy of Jerome Powell, that's a person who would be more concerned about stock market price action than the situation with inflation of dollar. They're not really scared about dollars ditching from, for example, world economy or oil production industry. That's not the thing. That's not the main thing. That's actually the illusions of different type of analysts, which are a little bit pro-Russian, unfortunately. But as we know, something like this could happen maybe within some decade, but not today, and by the help of China, not Russia, but China. So upward movement of dollar maybe could continue. Here we have a really great accumulation of energy on 4-hour chart. On 1-hour chart, this accumulation is like this. So dollar prices are showing that it's actually making a pattern, which means that after this pattern formation, we are going to have some impulses. Mostly this impulse is going to be upward. So we could have some downward speculation on the stock market in the near future, after which stock markets are going to return to the upward movement. But for now, for today, maybe for next sessions, we just need to get ready for this downward speculation. So for euro, we can say that we have a range of risk to 1.04 or maybe 1.0450. This would be the main range here. But after the impulsive retest of this range, we're going to get into the upward movement, or at least the consolidational movement. So euro could stop to fall, or maybe could start to make some movements like here, for example, after the test of 1.04, 1.0450, as well as GBP, which could look more powerful because situation which is the situation in the economy of Britain, it's kind of better than Europe. 4-hour charts, there is no local minimums. Most of them have been broken through. Actually, if you pay attention on daily charts, we had some local minimums which have been broken through, and now we have accumulation of energy. On the daily chart, this would really mean that prices for this month, maybe they're going to get into some consolidational movement. So here we cannot really say that prices are going to continue to fall. Not euro, not pounds. Mostly dollar is going to fall a little bit. Stock markets are going to strengthen again. And as well, euro and pound, Australian dollar, mostly, and New Zealand dollar, mostly better than European currency and British currency are going to rise. But for them, even for pound and for euro, we can say that prices are going to strengthen a little bit, or maybe make some consolidational movement, like here, for example. They are going to, for example, make some really moderate upwards movement with a really tight volatility, which means that that's not a real trend for midterm traders or long-term traders. But this would happen, and before this thing happened, before we reverse, we have to wait for some extra speculative movements of bears. They could maybe break through local minimums in nearest sessions. They could break through 1.23, which is a really important level for GBP, for British pound. I remember this level, 1.23, 1.20. This is a range after the retest of which we're going to return to the main phase. But don't forget, we have some risk range always in trading. So that's a risk range. We have already told you about the risk range on S&P 500, on Dow Jones, and on the Nasdaq index. And as well, here we have them as well. So 1.23, 1.20 is a range. I think that maybe 1.2050, 1.22, better to say maybe. Let's say 1.20, 22, 23. Just finish it on 22. More realistic. I don't think that prices are going to make that much impulse. So next comes Australian dollar and New Zealand dollar. As we see here, prices are more strong due to daily chart, due to 4-hour chart. They have already bottoming. They've already retested the local minimum, and there is no reason for them to fall further, because oil prices in near future, they could continue to rise. They could start to rise again. And if oil prices start to rise, we could have a really great reason for Australian dollar and Canadian dollar as well to rise further. What is going on now with Australian dollar prices? There is a level 0.72 before the retest of which, before the retest and the strengthening above which, we cannot say that prices are going to reverse and continue to rise. But they could make some movements like here, for example, a really moderate upward movement. In the case of oil prices, for example, consolidation during next weeks, maybe they could make some movement like here. But if oil prices start to rise, maybe Australian dollar could make some sharp upward movements. So because there is a prediction that mostly in the nearest week, maybe we could have some de-escalation in geopolitical situation, because just yesterday, the day before, Austria, Germany, most of countries have told Russia that they are not going to buy Russian gas and Russian oil in rubles, in Russian currency. Because of that, Russia could actually feel this ban, feel this wall, which is getting near to it. And as well, it's a time to make some, as we say, after 2 weeks of active conflict phase, last conflict phase, we can say that markets can get ready for some de-escalation. And because of that, oil prices maybe won't make that sharp upward movements in nearest weeks. So because of that, we can say that if even Australian dollar or Canadian dollar rise further, they would maybe make some movements like here, really moderate, really unstable, and long if they're going to reverse. And mostly, I think that they're going to reverse. Here is a really great potential risk range, which we could choose 0.70, 0.71. After the impulsive retest, of which we could be more sure that prices are going to strengthen further, but we're kind of have already retest them. So if prices are going to if the volatility is going to get shrink in the near future, if prices are not going to break through 0.7 in near future and stuck under it, this would be a really great reason for Australian dollars to continue to rise in next weeks. And let's see what's going on with New Zealand dollar as well. Here picture is really, I'm sorry, New Zealand dollar to United States dollar. So here picture showing us that the local minimum have been already broke through. And before we get above 0.66, we cannot say that prices have been reversed. But in the near future, from 0.64 to 0.66, we could have some upward movements. We could have some continuation of upward movements. And due to this movement, we could say that prices are the prices going to continue this upward movement or not? So if this movement is really consolidational, really hard with shrinking of volatility, in this case, we cannot say that prices are going to rise further because they would reverse from 0.66. And if the prices are going to impulsively retest 0.66 as well, there won't be any chances to continue this upward movement. Maybe some consolidational movement, but not upward movement. So for New Zealand dollar, New Zealand dollar to United States dollar, we could be more sure that prices are going to make some reversal in near future, but till when? Till the retest of 0.66, I think so. Next comes the oil prices, the oil market. We're going to check the prices of oil, gas, and Canadian dollar, maybe Mexican peso as well. Let's see what is going on with WTI prices. Then we are going to go through the gas prices as well. So as we told you, prices of oil are under really high pressure from Chinese authorities. First, they told that there is COVID spreading around China, across China, and they need to close different cities. And they're, for now, this quarantines, this lockdowns are continuing. And because of that, oil prices, the demand on oil is under really high pressure, only from China. Previously, China actually opened a really huge amount of gas reservoirs from in China, because it actually told everyone that you can actually buy from us because we don't need this amount of gas. Our factories are not working. So they are making a real high pressure on oil prices, on gas prices. This pressure is continuing. They have already balanced this situation. So Russia and different maybe companies were really thinking that this problem in Ukraine would help oil prices to rise further. Oil prices would rise further, but within some months maybe. They would really thought that maybe oil prices, gas prices are going to rise really wildly, really strongly, but only because of China this is not happening. What would happen next with oil prices? I think that here we have a really great accumulation of energy. We could have some speculative upward movements, But in this case, dollar prices have to fall. And because of the situation with oil prices, we cannot say that oil prices are really going to rise in the near future. So we are choosing the range 100, 110, 115 like a risk range. In the case of the retest of which we are going to, for example, make decision to short, to make, for example, further to short oil price, oil positions, not to buy but to sell. So here is a range of 110, 115 after the retest of which we're going to reverse mostly if this retest is going to be impulsive. And for gas prices as well, natural gas prices, from previous time, prices have been already retest 6.5, and after a test of 6.5, prices have been retested. From previous time, I told you that $7, $6.50 are the levels after the retest of which prices are going to reverse, and that's what happened. So prices of gas for now are retesting local minimums. They could go further. They could go till 8.50, maybe 9. But in the case of de-escalation in the near future, which is really, really possible, just for a while, I don't mean that de-escalation forever, geopolitical de-escalation between Russia and Ukraine. In this case, price of gas could get into some consolidational movement again. They won't rise that further, that far. So we would use the retest of all 8.50, $8.50, maybe $8 or maybe $9 even as a risk range. Just let's say that $8 and $8.50 is a risk range. Above these levels, we are going to actually be sure that prices are not going to go to rise further. So here, the maximums, unfortunately for now, they are risk range. They are not target levels to buy further. They are better like a risk range to just sell from them, not to buy from them. And let's see what's going on with United States dollar to Canadian dollar, which is oil currency, which is really related. The price of which is really related to the oil price action, and it has a straight correlation. So when oil price is rising, this pair price is going to fall. For now, you are observing a really great rally of United States dollar because oil prices are under a really high pressure, and because of this pressure, prices have been already reached the local maximums. From previous time, we told you that prices are not going to go further than this local maximum. They are mostly going to reverse. This reverse happened, but prices again retest this level, and this retest is a false breakthrough of the local maximum. Because of this false breakthrough, for next days, if prices are not going to get above 1.29, this would be a really great reason for us to short this pair, not to buy it, but just to sell it. And this would mean that oil prices are going to rise and oil prices are going to fall. But here, we are going to as well find some risk range for us to, for example, from 1.30 to 1.2950 is a risk range which could get retested in the near future, but we have a really hard and really visible divergence. Doesn't mean that prices are going to reverse in next minutes. It just means that prices would reverse in midterm because it's a 4-hour chart. But before they reverse, there would be some speculations. So the retest of 1.30, 1.2950 are really realistic. And after the retest of these levels, we could get into some consolidation. Prices maybe won't rise further. The reversal won't be that strong, only because oil prices are not rising that much. But if oil prices start to rise, the reversal from 1.30, 1.2950 would be really powerful. Next comes gold prices and silver prices. We are going to check the gold prices, silver prices, maybe palladium and platinum as well. So let's say Gold prices and silver prices mostly correlating with each other really straightly. So let's see what happened from previous time. 4 hour chart, gold prices, and from previous time, 26th of April or 28th of April, I think. We had bottoming the local minimum. We told you that prices are going to reverse, but this actually didn't happen. Mostly fundamentally, we told you that gold doesn't have any reason to rise. Many people tell that gold would rise because of situation of stock market, but stock market, when, for example, stock market is under pressure, gold price could rise. But the most important reason why it's not rising is because of the China's policy. China central bank have been already get freed from the bubble, the liquidity bubble in the financial markets. So it don't really need to fight with any kind of inflation or something like that. And other banks as well, they're not going to buy gold to save this problem. And another reason, the hiking of the predictions which are repeating every week about Federal Reserve System hiking the interest rate, tightening the monetary policy, won't let gold prices to rise that far. And fundamentally, we told you that prices of gold doesn't really have any reason to rise, but we could have some reversal from this level. It actually happened, but it was really, really under pressure of fundamental factors. So now we're around 1,850, which have been retested. 1,900 could get retested in the near future, but I don't think the prices are going to reverse in the near future. Mostly we have to pay attention that we have some convergence signal, a really good signal of a reversal, but don't forget that this reversal won't be that powerful, won't be that long, or even won't maybe leave that long. So 1,900 is level targets resistance after the retest, which maybe you could get off from long positions and get into sells. So here we have some chances for gold to rise again, maybe get into some consolidation first and then rise a little bit, really moderately, especially if it rise impulsively. This would be a really straight signal of the continuation of downward movement. I'm sorry, that was, yes, that's gold prices. And the silver prices as well. They have already retested the local minimum, have get further. 23 and 22 have been retested. Now prices are consolidating between these two levels, 22.50, and I think that maybe they are going to make some upward movements. It won't be that powerful. And 23.50, I don't think that 23.50 is going to get retested even. 23, let's say 23.20 at least. Those are local resistance, which could get retested impulsively mostly, and then prices are going to continue the consolidation or the downward movement around 22, inside 22 and 23. And let's just go through United States dollar to Japanese yen. Unfortunately, in Japan today, tomorrow is a holiday, so volatility is really, really shrink. I don't think that's a really good reason to trade with it. United States dollar to Swiss franc. Situation could be actually the same. Here we have some impulsive downward movement, which means that dollar price is getting weaker. 0.97, 0.9650. After the retest of this level, we could get into buys again. But I think that maybe 1 day or 1.5 we have to wait for these levels to get retested, and then we could get into some, as we say, long positions or get into bullish trend. We have to actually wait maybe for one day, maybe I think 0.97, 0.9650. They need to get retested. And so let's see what's going on with Bitcoin prices and Ethereum prices, the most important and famous indexes of cryptocurrency. From previous time, we had some reversal Let's return to 4-hour chart. We had some reversal from local minimum, and as you remember from previous time, we told you that this reversal doesn't mean that prices are going to rise. Week have been passed already, and prices are not rising. Prices just continue to fall. There is a really moderate, really mild convergence between minimums and the line of oscillator, which would mean that there would a really short kind, or maybe short-term kind of reversal, which have already happening. So there's 7,000, 40,000. We are not even getting inside this range. We cannot say that prices are even going to rise in the near future. Mostly they are going to retest local minimums or even go break through $37 as well. So here for Bitcoin, unfortunately, news are not really great, and Ethereum could be as well. Not that optimistic. We're under a local minimum. We're under a really important mirror level of 903,000, and I don't think that impulsively even we are not going to retest these levels. Mostly prices are going to fall further. Thank you guys that you watched this video. Don't forget to subscribe on the channel and ring the bell so you would know what kind of different type of programs we have on this channel. And don't forget to check the official site of our broker Gerchik Co, and you actually would find different type of instruments for trading and different type of lessons and courses for traders, beginners, or even professional traders. So don't forget to check this information. Don't forget to check the official site to find the different type of instruments for trading. Most of them actually are free, and different type of packages which you can actually buy as well with a really great sell-offs. So don't forget to check all this information on the main site of Gerchik Co broker, and subscribe to the channel. Don't forget to ring the bell and like this video. Wait for your comments. Until next time, have a great time. Good tradings. Bye bye.